Hey everyone, HIMS and HERS was already gaining popularity as one of the better healthcare companies worldwide. Nowadays, that popularity has accelerated given the company's announcement of a lower priced weight loss drug. So in this video, I'll revisit HIMS and HERS stock and answer whether or not I think the company is attractively priced for a long-term investor. In other words, I'll answer if the stock is a buy, hold, or a sell. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in their latest quarter, the company generated $278 million in revenue, which was up 46% year over year. Perhaps more importantly, the company delivered profitability on the bottom line of $11.1 million. That was up from a loss of $10.1 million in the same quarter last year. If you look at operating cash flow, that jumped by 172% to $25.8 million. That was up from $9.5 million in the same quarter the prior year. The company is attracting customers effectively at an effective cost per acquisition. You can see it now has 1.7 million subscribers. That was up by 41% year over year. And the monthly online revenue per subscriber is $55. So each subscriber, on average, $55 multiplied by 1.7 million subscribers, generating significant revenue for this healthcare company. Additionally, the launch of this new weight loss drug at a lower price point could fuel further increase. There's been reports that there are shortages of weight loss drugs that are out right now in the market, and those drugs are at higher price points. So if HIMS and HERS can come out with a weight loss solution at a lower price point in a more convenient form factor, then that could have significant demand in the marketplace. So the company has already done well, and if this weight loss drug does end up coming out at the price point that's rumored, I've heard $200 instead of the $1,000 per month on average that weight loss customers are paying right now for the existing solutions, that could be a big catalyst. So exciting times for HIMS and HERS. And the company, if you look back longer term, revenue has grown very nicely since 2021. It generated $200 million in revenue in a trailing 12-month period in 2021. That's increased by almost 5x up to $959 million in the most recent trailing 12-month period. That's allowed the company to boost its cash flow from operations up to 9.36% in a trailing 12-month period, up from negative 12% from January of 2022. So it is demonstrating increasing profitability as a result of increasing sales. I like to see that. You've heard me talk a lot about that metric in previous videos. So cash flow from operations, also operating profit margin working in the same direction, negative 0.086% in the trailing 12-month period. But as we just highlighted in the most recent quarter, the company was profitable on the bottom line. So if we look ahead, I wouldn't be surprised if in the next quarter, after the next update, this metric turns positive as well, as the company has demonstrated progress on this front over the years. Looking ahead, the analysts on Wall Street that are following HIMS and HERS, they think the company is going to increase earnings per share by 94.9% over the next 5 years. Now, these are the analysts on Wall Street that are following HIMS and HERS stock. Not everyone thinks it's going to grow by that rate. Some might think it's lower, some might think it's higher. This is the consensus estimate among all of the analysts that are following HIMS and HERS stock. Remember, nobody knows what's going to happen in the future. This is just their best estimate based on the numbers they have to work with what they see in the marketplace for their existing products and the pipeline of new products they have coming out. They incorporate all of that into their estimates and assumptions and forecast and come to a conclusion of 94.9% earnings per share growth over the next 5 years. Now, HIMS and HERS stock is trading at a forward price to earnings of 33.64. Now, that's a relatively cheap valuation if you're confident in these earnings per share expectations of 94.9%. But even if not, even if the company grows at, let's say, half of this rate of growth that Wall Street analysts are expecting, even if it grows at just 47% for the next 5 years in earnings per share, that would be a good investment to make at a forward price to earnings of 33. You've heard me talk a lot about comparing the earnings per share expectations with the forward price to earnings ratio. What I like to see is forward earnings per share expectations higher than the forward price to earnings ratio. So I like to see this number here, the 94.9, be higher than this number here, which you do see for HIMS and HERS. This is 33.64, and the expected earnings per share is 95. So roughly 3 times that of the forward PE ratio. So this suggests that the company is relatively cheap according to its growth rate, its growth expectations. And so if I were to consider HIMS and HERS stock, what would I think it would be? Is it a buy, hold, or a sell? Well, given everything that I've considered here, I think the stock would be a buy at current valuations. Still, there's plenty of risk to consider. There are plenty of downsides to consider. The company has only been around for relatively few years. These upcoming pipeline of drugs that are potentially coming out, these weight loss solutions that everyone is most excited about, remains to be seen what the economic impact will be to the company. Will it be at a rate that is positive for the company's overall financial prospects? Will it continue to drive its operating profit and its cash flow from operations higher? Or is that price point that's been rumored to be too low? Or can they gain market share with their products? Can they gain the trust of consumers to go out and purchase their solutions versus the legacy methods of getting healthcare? So those are the risks here with HIMS and HERS stock. Those are the risks with relying on a pipeline product portfolio that is yet to be out, yet to be proven. But overall, when I consider all the risks versus the rewards, and I compare the risks versus the potential return, given the current valuation, it works in favor of HIMS and HERS Health. It works in favor of the investment. It works in recommending it as a buy. Still, even though I'm recommending it as a buy, remember the risks involved, remember the downsides involved, and remember that nobody knows for sure what's going to happen in the future, especially when it comes to these types of investment. Medical companies, the research and development that goes in, the market share, the competition, all of that is highly uncertain and very risky, riskier than usual. And that's why you got to consider the downsides along with the potential upside for this excellent business. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.